Lofty. My next guest said for some companies, we may be in a green tech bubble. Here to explain what he means by that is Andrew Lee, head of Sustainable and Impact Investing at UBS Global Wealth Management. Let's be clear here. You're not saying that the sector as a whole is in a bubble, but that some individual companies may indeed be unhinged or unhitched from reality.
I think that's right. I mean, what we've seen is certainly the price runs that you referenced in some of the pure plays. But I think the longer term thesis and the opportunity in environment and climate related technologies that help to enable a cleaner energy mix and enable energy efficiency, the broader thesis remains intact. So, I mean, I think the four key areas that we look at within what we call green tech opportunities are clean energy, smart mobility and electric vehicles, energy efficiency, and some of the enabling technologies like semiconductors that feed into a number of those opportunities.
Go ahead, finish your thought. I beg your pardon.
No, I was just going to say broadly speaking, I think the thesis is there. I think some of the names we've certainly seen runs in, and with a long-term thesis, you may see corrections here or there. But yeah.
So I want to get a little closer to one of the things you said, that you prefer a broader approach to investing in green tech rather than focusing on richly valued pure plays. We recommend a diversified but selective approach across industries and geographic regions. Tease that thought out a little bit to me, and I don't want you to name names particularly, but maybe you can point indirectly to some things that you consider what's a pure play here and what are those ones that are more diversified across businesses and regions.
Sure. So, I mean, I think when we talk about pure play, think about some of the names that have seen some of the big runs. An example would be hydrogen fuel cell providers, more of a pure play approach that has seen, where you have seen significant price moves. But some of the larger, industrial gas players that are clearly part of the hydrogen supply chain, you haven't seen, as much of those runs and actually have underperformed the S&P 500 while you've seen a significant run there. So, that's what I mean by pure play versus some of these more diversified plays where you have exposure to those names or to the similar drivers, but you haven't necessarily seen the same price action. And I think, if you look at some of the indexes, right, clean energy indexes versus something like a smart grid infrastructure index, you can see some of the differential in terms of performance, right, where you're exposed more directly to some of those pure plays in the renewable energy or clean energy space. And you've seen significant price run, a little bit of a correction since the January highs in early January. But, you look at something more like smart grid infrastructure, where you've got a little bit more diversification, more of the infrastructure related plays, where there are also end markets that are not just renewables or climate, right. And actually valuations are pretty comparable. So haven't seen that same price correction over that same time period.
Shepard Smith here. Thanks for watching CNBC on YouTube.